Hello and welcome to Money Control. We are delighted to have with us Mr. Hitendra Dave, the CEO and Chief Executive Officer of HSBC India. Mr. Dave has been at the helm of HSBC in India for the last 3.5 years. For the year ended 2023, December 31st, 2023, HSBC India was the fifth largest in terms of contribution to global profits, a position it has maintained for the first 6 months of 2024 as well. Mr. Dave, welcome to Money Control.
Thank you, Bodhi. Glad to be here.
So let me start off on some global macro, and lots of macro action coming up. I think this is now the macro period. There is, of course, the Fed meeting this week. And in fact, there are 20 central banks. I think there was a headline of a Bloomberg story saying that 20 central banks are going to meet this week. And many of them are likely to cut interest rates. There's much speculation on what RBI might do in February. We'll just come to that in a moment. But what do you see as the overall impact of the end of the tightening cycle, a decisive end of the tightening cycle, and a beginning of loosening?
So I think the main thing which has changed in the last 6 months, or maybe more in the last 3-4 months, is that yes, this rate cuts which are widely expected, especially by the FOMC on Wednesday night. And that's not the relevant issue anymore. I think the relevant issue is where is the terminal rate? And I think on that subject, there's been a significant amount of change of, earlier we were talking about going all the way down to 3. The more bullish calls were below 3. And now increasingly people are talking about this 25 basis cut on Wednesday, but thereafter a significant slowing down of further cuts.
Right.
That's on the back of a more stickier than expected inflation, but also expectations that the Trump presidency is likely to be growth oriented, which has its own implications from an inflation perspective, etc. But the cuts that have taken place so far largely is to take it from an extreme restrictive levels, 5 quarter, 5 half, to what will now come down to 4 quarter, 4 half on Wednesday night as the base case. From an audience perspective, I would say the issue is not whether this is a cut or not. The issue is what does the language, what does the forecast, what does the subsequent data that they release as their dot plot suggest is the terminal rate or expectation of the pace of easing next year and the quantum of easing. Yeah, that's much more relevant, I think.
Right. So in terms of what the Indian central bank might do, what are your expectations?
Yeah, I think it's not easy being a central bank at the best of times, but I guess these days with inflation turning out to be in India stickier, now you can argue whether food inflation should be given as much weightage as non-food, but right. I think it's not an either or debate. You have to use your judgment in these things.
A lot of debate on that issue.
Correct. There is a debate, and I'm more in the camp of the central bank here that inflation is inflation. If you carve out this part of it, non-core part of it, then it's then you're not really managing the inflation at all.
In fact, it reminds one of the US, whether when the inflation reached 8-9% in the US, whether it was transitory or not,
Correct.
how much, ultimately there is a number, right?
Exactly. And inflation is what the ordinary citizen of the country experiences, right? I mean, if he or she is experiencing it through potato, tomato, onion, pulses, edible oils, then that is the inflation.
Right.
Not everybody in the world is an economist where you can say, this is not really inflation because I cannot influence it through monetary policy at all. Right. So coming back to the Reserve Bank of India, I think so far they had because growth was largely along projected lines, slightly stronger than many people's expectations, the central bank therefore could exclusively afford to focus only on managing inflation and bringing it down. Obviously, the most recent GDP print has shocked everybody, right? At 5.4, it's lower than almost any, even the most pessimist was not talking about that. So that brings in now how much growth sacrifice do we as a country make to achieve the inflation outcome? And is the growth sacrifice, would the growth have been any different, even if rates were loosened a little early? So increasingly, I sense that as, the moderating effect of winter on food prices takes place, some of the things on edible oils, etc. And the natural moderation in inflation that is coming from weakness in demand. Base cases, as we roll forward in time, we should increasingly be trending to around 4.5, 4.6 on a forward-looking basis.
Yeah.
And that offers our Reserve Bank of India the opportunity to tinker around with rates. They've already changed the stance. They've added liquidity in the last policy. So they want to help. Right. I think any data that helps them move, I think would be what they could use as the trigger to actually effect on rates. But here again, issue is not whether they cut 25 basis points in Feb. what is the length of this rate cutting cycle? Because between 6.5 and 6 quarter, there is no significant stimulus that you provide. So is it, as many people expect, a shallow rate cut cycle, or is it a deeper rate cut cycle to reflect the structural need of the economy to have more stimulus, both from the monetary policy side as well as from the government spending side?
So, as you said, the 5.4 was a adverse event. I mean, it came as a surprise. It was lower than almost everybody expected. There was some speculation about that the RBI might even go in, because as you said, they've also changed their language in the December 6th monetary policy. They will focus more on growth. Is there any chance that they might go in for a premature rate cut? Because more data will come in. Is there
intra-policy, you mean?
Yeah, intra-policy rate cut.
No, I obviously don't know what their thinking is, but I hope not, because intra-policy typically is a reaction to a extreme, like it's like a COVID kind of a situation, right? Yeah. Where nobody had prepared for it, and then you have this complete story.
Or like the global financial crisis.
Yeah, so those events are different, right? A GDP print which disappoints you, you don't have to react to it, because monetary policy works with a lag in any case, right? It's not like if you cut today, tomorrow the demand will revive. So I really don't think there is a case for any intra-policy cut, because you could actually spook the market. Many times the market thinks the Reserve Bank knows much more than we know, and then if they do intra-policy, we think, my God, is it a series of low prints or something which has other implications? So the best course of action is get together before the Feb policy, do your 2-3 day deliberations. I think the fact is that more focus will be given on growth than was needed, say, a couple of months back or so, and then reflect that with the inflation prints of December and Jan, and then take the appropriate action. I think at this juncture, however, for Reserve Bank of India to continue to maintain the stance might become very difficult.
Right. Does the Reserve Bank know much more than we do? And the market thinks that. Is that correct?
I think they have wonderful data. I mean, they collect data on everything, right? And they sometimes it's shared through the monthly bulletin, and others, they, I'm sure, use it for their own analysis, and that's how they are able to give the growth forecasts and the inflation forecasts and any other forward-looking surveys, etc. So they clearly have a lot of data. And any central bank has a lot of data. It should have a lot of data. Otherwise, it's like anybody like me who's in the private domain but pretends to understand macro versus people who genuinely understand macro data.
Sure. I'm sure you understand macro quite well. I'll come to one more macro question. So on the 5.4%, why it came down so much? I mean, there's obviously been a lot of analysis around that. The government capex has obviously fallen by, I think, about 25-30% this year so far. But what is your take, and more importantly, what can be done to turn this around?
Yeah, I think, there were 2-3 things, right? Industry / manufacturing had a very, very sharp shrinkage, right? Government spending, as you mentioned, had significant amount of slowdown because the budget was announced in July, that was that quarter or so. I think the one good thing, I mean, trying to be looking at the glass is half full thing, is that this data is going to trigger all policymakers, everyone, to say that, we cannot assume growth to be a given in India.
Right.
Sometimes we can get into that zone that, listen, 7% is preordained. If we do well, we'll go towards 8, but very rarely will we come towards 6 or so. So I think this data will actually make everybody, whether the Reserve Bank of India, whether the policymakers in North Block and in Government of India, or people like you, people like me, we all need to do more to preserve the growth and nurture the growth and things like that. So it's great to see the Chief Economic Advisor, for example, talk about the compliance burden that is there, right? This is the first time people are recognizing that, listen, if you want to help people to start businesses, grow businesses, employ people, explore markets, you let the entrepreneur do that, as opposed to, my God, spending hours and weeks just complying with lots of the compliances that haven't come. So that is the one silver lining I see in this. There will be a natural correction in government spending. I think by all accounts, and just anecdotally talking to people, it looks like October, November, there's a revival, right? There's a revival. You feel it in a lot of small data points or so. But still, work has to be done. I think government needs to even out its spending patterns. I think there's a lot of talk of private sector capex. The October exports numbers were almost 19% higher than last October or so. So there are visible signs that we need not get too carried away by the 5.4. It could be the low of the cycle. But everything has to be contextual. Our country needs, I don't know, 1 decade, 2 decades, 3 decades of, quite honestly, 8% plus growth, so that the masses, the masses really, there should be no such thing as poverty in India. It should be about whether you're lower middle class or middle class, as opposed to the really poor classes. And that makes a very big difference when you compound at 6.5% versus when you compound at 7.5 to 8%. That 1.5% over a 10-15 year period, it means a lot. And therefore, I really hope all of us can contribute our bit to the thinking and execution and policy making.
Right.
Yeah.
Right. These are all fascinating subjects. We need to pivot a bit to HSBC in India, and we can perhaps even talk about the compliance burden on foreign banks also as part of that discussion. But we'll come to that in a moment. So HSBC has become a significant contributor, at least in terms of profitability, to the global bank. It's among the top 5, close to even perhaps among the top 3. How has the year been for HSBC in India so far?
The banking system in India right now is on a rising tide basis, right? As the famous saying by, I think, Warren Buffett, it's only when the tide goes down that we will discover who was having swimming trunks and who didn't have. So I think at this juncture, the entire banking system, the credit losses, even despite the spike in microfinance and unsecured loans, are still very, very manageable. I think some banks have had challenges around deposit growth versus credit growth, etc. But that partly was due to the fairly tight liquidity, due to the government balances with the RBI on a sustainable basis being very, very high. As that's beginning to change now. So for us in HSBC, I think we've been sticking to our strategy. Okay, I think India is a land of wonderful opportunity, and it is very tempting to behave like a kid in a candy store, right? I'll do this also, and I'll do that also, and I'll buy that also, and I'll distribute this also. I think me and the executive management team we have, I think if there's one thing we feel good about, it is the fact that we stuck to our strategy. We have chosen customers well. We have chosen those customers where HSBC is able to deliver greater value than other banks, and where the globality of our organization is made available to those customers. This could be people sending their kids abroad to study, companies setting up sourcing units in the rest of the world, exporting to the rest of the world, importing from the rest of the world. So largely it's globally oriented corporates and globally oriented individuals. Wealth focus from and we have a wealth and premier proposition, which is, we think, best in class. So we feel good about how the year has been. I think, could we have done better? Why not? We should and could have done better, I think. But we want to remain very aligned to where we deliver the maximum value. But to answer your question, 24, I think, is a year where we feel good about what we have seen.
So, you may not want to sort of comment on what other prominent foreign banks, but there obviously one of the big foreign banks has withdrawn from, for example, from the credit card segment. It sold its operations. You have chosen, you haven't adopted any such strategy in India. You were focusing largely on HNI and so on, right? And in fact, you've even doubled down on retail in a sense because of the acquisition of L&T Mutual Fund, right? Which gives you a big exposure to retail nature.
Yeah. So I think our it's called international wealth and premier banking. Right. That's so if you look at each of the words, that tells you what we are trying to do. International, any NRI around the world who wants to relocate to India, any Indian who wants to go abroad or wants to have some wealth abroad. So that's international. Wealth, again, this is my strength, right? We have wonderful relationship managers, very qualified investment counselors, and we are a long-term partner. We are not a hustle sales team or something, because we want to have multi-generational relationships. And Premier Banking, by definition, Premier is our brand, which is to the affluent sections of the society. So we find, irrespective of whether other banks have quit or not quit India, I think we find that the number of people who need internationalism from a bank in India, number of people who have become wealthy. It's amazing. In the last 5 years, all of us are experiencing the number of people who easily are now making almost $100, $200, $300, $400,000 has gone up by a factor in the last 4 or 5 years. And our premier proposition, which is the unique proposition we have. So we are doubling down on India in international wealth and premier banking. The mutual fund that we bought from L&T then, and now it's called HSBC Mutual Fund, it's done wonderfully well. I would encourage the audiences to track the performance of some of our schemes versus the market. So yeah, it's all looking good for us.
Right. So in a broader sense, Mr. Dave, could you talk about, the, if you like, the regulatory burden or the compliance burden which faces foreign banks? I mean, there used to be many years back, I don't know whether that's still around, I think the number of branches which foreign banks could set together was limited to 12 per year and so on. There were all kinds of discussions around that. Where do we stand now?
No, so I think I want to clarify one thing. I don't think foreign banks have any extraordinary compliance burden vis-a-vis our domestic counterparts.
Right,
it's the same. So if anybody's given you that impression, I think it's possibly that's an inward-looking thought, as opposed to understanding that this is how the market operates. I think HSBC works in more than 60 countries. I think if there is a bank that understands that you need to be complying by the rules of the country that you operate in, that's our bank, right? Because you cannot impose this is how I work in UK, or this is how I work in Singapore, or this is how I work in US. So generally speaking, being a compliant organization or complying with the rules and regulations or the regulator, I think as an organization, we find it easier to do. Okay, because I do speak to people from other organizations where it looks like an extra burden. Maybe it's just the DNA of the firm, the culture of the place, the values that we have. I think we understand that. And quite honestly, there's a reason why in the 165 year history of the bank, we've never had a bailout, right? A lot of other banks with great and fine reputations in the media actually have had bailouts every 10, 15, 20 years, right? So we don't want to be in that situation ever. And one of the ways you get to be in that situation is to comply, not just in letter, but also in spirit. So the burden is not extraordinary to me. If you ask me as the chief executive officer, like, am I spending hours and hours every day doing just that? I think you have to spend one time and regularly refresh the processes, the reporting and the compliances, and then it's sort of the machines take over. Sorry, what was the second part of your question in here?
No, that was more or less it. I mean, that was generally the situation facing. So would you consider becoming a wholly owned subsidiary at some stage?
See, these are discussions which we put up for periodic review in our executive committee and were based on the consensus of the executive committee. And by the way, executive committee for the purposes of a branch is effectively the board from a regulatory perspective, right? So it is an important forum. Right. And once, if we get to a conclusion that there are opportunities within the customer set that we can deliver maximum value to, right? And that at this juncture, our sense is in the legal entity shape that we have today, we are able to do justice to the market opportunity. We are able to serve the customers using technology and people in the best possible manner. And the growth is not constrained for us. That's the current assessment. Right. But this assessment happens on a periodic basis. Right. And at some stage, if we come to a conclusion different to what we have today, that's when we will discuss that internally.
Right. So I'm asking the question in the context of the Yes Bank privatization deal. I mean, it's not quite private, but SBI is selling its shareholding, where there is an opportunity which now seems to be a bit on the back burner. There's IDBI, which is ongoing, in which various foreign banks. So it was really in that context that I was asking that question. And would you be interested in any of these opportunities?
No, see, I think HSBC Group, and as you do some research, is throwing up significant amounts of, liquidity, profits, etc. And therefore, the board at the highest level, I'm sure, evaluates multiple organic and inorganic growth opportunities. India at this juncture is a top priority market for the group. Right. And therefore, periodically, we do review what can be done in India. So they do ask me and ask us, okay, if we had to continue to grow, like our last 3 years CAGR roughly has been 20%. If you want to take it to 30%, can you do it on your own, or do you want to do something inorganically? So I think for any large global organization in India, it's impossible to say, I will never do this. Right. And obviously it's never right to say I'm open to everything. So the answer somewhere lies in between. Yeah. Sure.
So just to come back to the retail segment for a moment, I'm using the word retail loosely to include. So beyond credit cards and home loans and personal loans, are there newer segments that you would look at?
Yeah. So today we are, if you wish to open an account in Gift City, which is effectively a offshore center, and do from there, you want to place a dollar deposit, we have the capabilities. right? Anybody in your audience, if they want to do so, first of course you have to become an HSBC India customer. We won't take customers directly there. Right. Similarly, the number of people who now think in terms of global wealth, right? Everybody's made money in Indian stock markets, or in real estate markets in the last 4 or 5 years for sure. But at some stage, people do want to have a little bit of their assets internationally, right? So that's one of the fastest growing segments for us. People who are banking with us, are wealth customers here with us, have invested in funds and PMS schemes and AIFs and insurance through us, but now also want to do a little bit outside India using LRS. So we have wonderful connectivity with our wealth hubs around the world, and from there they can operate like any global citizen. So wealth is a growth area for us in the international wealth in particular is an area of great strength and opportunity for us.
So if you're looking to diversify, if you're looking to buy property abroad or even invest in markets abroad, HSBC would provide the services.
Yeah. As long, see, there are do's and don'ts.
Yeah, we have a capital account. We don't have capital account.
Under the LRS, there are do's and don'ts. We advise the customers on the do's and don'ts, and we have to ensure that they are also abiding by that. So yes, but anyone looking to invest abroad, anyone looking to buy stocks abroad, anyone looking to buy real assets abroad, I think the ease with which, see, HSBC's strength is our globality, right? If I fail at my globality, right, then I really fail the customer entirely, right? Then you might as well deal with other banks. So we deliver globality, we soft land people around the world. That's what our promise to the customer is.
Right. Yeah. How are things looking from a corporate loan point of view?
No, see, our banking business, like if I call banking in its, which spans the full gamut from the largest companies to, let's say, their dealerships and their vendors and their suppliers, etc., is the strength of HSBC in India. At this juncture, that's the dominant business. As I mentioned, I think the key here is good customer selection, right? Customers, they can have ups and downs in their business cycles, not a problem, but they cannot have ups and downs in their governance. So one of the things we look for is good governance, good culture, values. I think we find companies that typically meet these, you can trust them. You can trust them through balance sheet, you can help them explore the rest of the world, you can bank with their employees, you can bank with their vendors, you can bank with their channel partners, dealers, distributors, or whatever, things like that. So our corporate business is very clearly, I think HSBC is the largest corporate bank in the world. People don't understand just how big we are as a corporate bank and how big we are as a trade bank. So as long as we do good customer selection and they do the right behaviors, which I spoke about, I think the opportunity is great, and it's a business of which a lot of us are quite proud of what we are managing to achieve and deliver.
Right. Just to come back to the governance point, or to just go deeper into so those decisions on governance, do you take them locally, or is that in consultation with the global management structures?
See, we are a global organization, so that means there are things that you do locally, and there are things that you have to consult with your global stakeholders, because they might have other experiences around the world. Right. So you don't want to make the same mistake in 50 different countries. You made it once and then you avoid making that mistake or so. But the core things like, a smell test, right? In fact, when we hire people, we really see how good their nose is, because ultimately a smell test, right? Whether they can smell properly. That has to be done by the relationship manager or in any country. You can then recommend that I back this customer because of A, B, C, D, E. So that's how it works. So in any global organization, there is a black, there is a white, and there is a gray. And the gray is where your judgment comes in, and you hire people for good judgment eventually.
But if this is not a question specific to HSBC, it's true for anyone who's selling wealth management products. Isn't the incentive of a relationship manager, how much is he or she incentivized actually if they see something or sense something wrong about a high value client? How much is really the incentive to report back, and how much is the incentive to vis-a-vis getting business?
I think that's an excellent question. Okay, and any organization, not just HSBC, I think we have to ensure that messaging on culture, right? I keep telling people the number one job of the CEO is frankly to set the right tone on the culture and to reinforce the right culture. And culture is easy to use as a word, but very difficult to describe what that means. So I think as long as you keep saying, listen, if you bring in business to me, which has compromised HSBC values, I don't want that business. Okay, we tell our staff that, and our staff also tell our customers that, if you're wanting to do all these things, don't come to us. We don't tell you where to go, but don't come to us at all. Does that mean that we don't make any errors or my team don't make any mistakes? Obviously not, right? But the percentages, and if you speak to some of our customers, even our KPIs, right? I mean, in most other organizations, there is a direct linkage. You sell an insurance policy, X amount of commission practically comes into your. We don't have it like that.
Right,
so we don't
right.
have any single product related. It's on a much more holistic, on a relationship basis, including service quality, including longevity of the customer, including the amount of adverse customer feedback that comes about you. We do have a lot of processes in place to control mis-selling or over-aggressive selling and things of that nature. And ultimately, it's a lot about leadership teams reinforcing that we want only good customers with good business.
Because there is a power relationship between a relationship manager and a powerful client, right? Which I think you have, which is an issue that you have to deal with.
So yes, there is. You just have to ensure that you are reinforcing repeatedly that if we discover it, it will not be welcome news for you. And we also say, even if you've given up business, we reward people for giving up business and customers if it's for the right reason. So that story, so you have to spread that story as much as the wins, right? So yeah.
Fascinating. And no, I mean, in a country like India where there is capital account convertibility, while obviously the segment in which you are in some ways is an obvious segment for HSBC given its spread, but there are pitfalls and there's a whole host of regulations. The regulations also, quite frankly, keep changing.
Yeah, no. So, and therefore, our staff, our relationship managers, our investment advisors, our wealth advisors, if they are not on top of their game on FEMA, if they are not on top of their game on LRS or on general market conditions and wealth opportunities, then what is the reason somebody will come to me? See, I am saying I'm a banker for the affluent, for the wealthy, for the internationally oriented. And if I then give them a very, run-of-the-mill service or run-of-the-mill content, it's going to fail, right? And you will hear it in the market. If you talk to wealthy individuals today, and you will figure out which banks they prefer to deal with because of the people, because of the processes, because of the technology. And we do have a fairly good, again, to your audience, if you compare our international app, our banking app, you can in the same app see your dollar balances, pound balances, and rupee balances. And you can move money between the two, like, I won't say like UPI, but close to UPI, like, which is unique to us. So our customers, I think, understand when they come to us what they should expect from us.
We're almost out of time. I just ask you a last couple of questions. One is, do you think it's time for India to move towards some kind of capital account convertibility? Because that used to be there. There was this Percy Mistry report of almost 20 years back, and GIFT City does introduce an element of capital account convertibility. But largely it seems to be on the back burner. Is that
I haven't heard anybody in responsible position talk about it, neither at the central bank nor at the North Block. My own sense is eventually we have to go there, right? But it'll have to be preceded by your current account you should be current account surplus, right? Not current account deficit. Right now we are having the luxury of talking all this because the reserves are $660 billion. Your current account deficit is steady around 1.5% or so. But you should have a current account surplus. You should have a surplus in the trade account for sure. That means your manufacturing has to become that much more competitive, and quality and supply chains have to be great. Your per capita income needs to go up quite a bit, right? Before that, because we are living in a country where the moment you give them an option, a lot of people might keep their wealth abroad, and that has systemic and external sector vulnerability situations. So I think per capita income going up, absolute GDP going up quite dramatically, low and stable inflation in the long run, so people don't really feel that this is a depreciating currency. One of the reasons for people to move out is that's embedded in our thought process. So a lot of those preconditions have to come into place before I think we revisit that subject is my guess. But if I can add,
of course.
For all practical purposes, I don't think any businessman feels there is any capital account convertibility, right? I mean, unless you want to do mega like a $10 billion investment or something and your capital base doesn't permit that. For all practical purposes, every business is fully convertible on the capital account as well as for 95% or 98%. And even at an individual level, given the fact that we can do $250,000 of LRS per person per family, and an average family is 3 or 4, that's 99% of the
gives you a
population.
large elbow.
Yeah, 99% of the population is covered except the super billionaires or something. So I'm not sure you will change policy for the super billionaires at this.
There is also, I mean, de facto capital account convertibility for FPIs.
Correct.
And for P investors and the like. I mean, that's
so I think the good thing about India is the good thing about our regulations, I should say, is that we control who and what comes in. Once it comes in, you don't question the exit then, which is not what other countries offer. They will periodically stop a lot of dividends, royalties, profits or whatever. So the good thing India has followed, and I think we have followed, is that you check who comes in and how it comes in.
Right.
FDI, FPI. But once you are allowed, then the exit is much more easier, which for international investors is a very comforting thing. I mean, you look at the amount of profits taken by multiple PE funds and FDI sources by selling off Indian blocks. It's quite remarkable. I think $5 billion of profit just this year.
Some of the stock market listings by the big foreign subsidiaries also seen a sort of this thing. Any possibility that HSBC India could at one stage list? I mean, you have to go to a WS first, but it might be a mega $billion listing.
I mean, anyway, that's a question slightly above my pay grade, I must say. But it's an interesting possibility given the valuations in India. But I think the group right now treats HSBC India as, like I mentioned, as a top priority market.
Right.
I'm sure they want to keep owning 100% of us rather than share it. But at some stage in the future, I cannot say.
One last question. So HSBC India is by many parameters the largest foreign bank in India. What is the sort of growth plans, the vision over, let's say, a 3 or a 5 year period? Where do you see it?
Yeah, so I think I'll just repeat what I've said publicly in the more recent past, that what we have achieved in the last 165 years, I think we can do in the next 5 years. Basically, what I'm saying is we will grow at a rate which allows us to double what we have done in the next 5 years or so. That's the aspiration, that's the ambition statement. Will that mean we need to add more customers? Yes. Will that mean we have to do more with existing customers? Yes. Will that mean that we have to be much more technologically driven in delivering services to customers and internally processing those transactions? But I think all of us are super bullish about the opportunity this market offers. I think we are full of optimism on what we are sitting on. I think we all acknowledge that we are very, very privileged to be having a customer base and a franchise, which some of the work we have done, but much of it we have inherited from our predecessors, right? So I think with the kind of franchise we have across our wealth and international proposition, as well as on our corporate proposition, I think we can be that one international bank. We can be that one international bank in the country that, while operating like an international bank or a global bank, is aspiring to be at a scale and ambition like a top 5 private bank. That's what I would say.
Mr. Dave, thank you very much.
Thank you.